How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is episode 5 to the Asian Session Library, and we're going to go through another example of a successful Asian Session model last night. So all in all, what we normally do is we mark off our swing highs and swing lows that form during the New York lunch session. So that's the red highlighted area here. That's 12 p.m. to 8 p.m. The green highlighted area is the Asian Session, 8 p.m. to midnight. Just to clarify, many people want to know the settings for the indicator and what I'm doing. So what I set here, this is for the Asian session. It doesn't matter which one you do it for, but this is the time period for the Asian session, 20, 8 and 00. That's the midnight. That's for London, but I took it off. That's the London session one. 2 a.m., 5 a.m., and you can't see it on the chart. And you have the New York session one. This is for the lunch session. It's 12 to 8 p.m. That's how I have it set. And if you wanted to take off the indicator, so I take off all the other colors and stuff, and I took off one session, so you can't see the New York or the London session, whatever you want to call it. You can't see the third session here. You can only see the two that I have set up for it. Labels, lines there, so hopefully you guys are able to see all the inputs. You can pause it at any time, slow down the video, just to see what I have toggled on or off. But that's how I set up the indicator. Now, at this point, I find the 15-minute swing highs and swing lows that are unbroken. So take this off, and we're going to look for all the 15-minute swing highs. So we got one here, here, and then you'll notice all the episodes are exactly the same because the model is very consistent and simple. Welcome to episode 5. This is a swing low here. So you have buy side and you have sell side. So I just put a dollar sign just to represent that. Sell side liquidity. You got buy side here, here, and here. You have this swing high here too. Almost forgot it. And we also have one here as well. So that one. And you got that one. Now we play it forward to see what happens moving into the Asian session. So after this is 8 p.m., the start of it. And you can see it drops down immediately and purges one side. Purges what? Sell side liquidity. Price comes down quickly and runs this low at the start. Then we have the other principle in ideology. We have the opening price for the Asian session, which is going to be 8 p.m. And we can see it moves below it. And anything below the session opening price is going to be a discount. So immediately it drops down and takes out this low. So at this point, I'm on alert. I'll scale down to the 1 minute time frame. That's just my personal take on it. I like to scale down from the 15 to the 1 minute. You could do something completely different. You could go 15 to the 5, 15 to the 3, 15 to the 4, 15 to the 2, whatever you would like. This is just my process. I go down to the 1 minute time frame, and I'm looking for a very simple entry technique, fair value gap. And we can see it forms right there. That's the break of that 15-minute swing low here. And that's price dropping below 8 p.m. opening price here. That is right there. So it drops down with speed really quick to get to that 15-minute fractal swing low. And what happens here, it creates the fingerprint that I'm looking for. This is the fair value gap here. Now, many people want to see it, hit it, and respect it. There are times where you'll see price hit it, consolidate around it, even below it, and then it takes off. Or the setup fails. But all in all, I trust the model because I've been doing it consistently. Just need a little more practice to feel more comfortable. When you do it in a demo account and you practice it every day, Monday through Friday, even Sunday too. People don't realize you can formulate this setup on Sunday as well. Price comes down to the fair value gap and you take that long at this point, following the model. 15-minute swing low broken, wait for a lower time frame PD array that you like to use. I personally like the fair value gap. That's how I'm going with it. You could see the breaker, you could see the mitigation, whatever it is that generates the start of your entry point, you can use that. Our eyes all look differently. Trading is not mainly objective at times. It is very subjective. And that's where I would go long. So here, that's the entry point. I'm going to do the same thing. The entry point is going to be the green. So as soon as price comes down and hits that, I'm long. Then my stop loss is generally going to be 15 to 20 pips. Got that 15 pip SL here. I'll mark it off. $15 pip SL. Red. That's that. And then at this point, TP is always normally the same. I'm generally looking for ideally 20 pips minimum. And the fact that 20 pips also lines up with this 15-minute swing high gives me even more confidence that it's a feasible target for the market to reach for. It's not a whole lot of pips. It's only 20, and the 20 lines up at a swing high that forms during the New York lunch session, which is normally going to be consolidation. We'll change this into this green, and we'll say the TP is 20 pips. And that would be how I would go with that. And then if you play it forward, we're going to see. Now, if you're in the channel, in the chat, you'll see that I was sending a lot of images live as the market was playing out. And multiple times, I was looking at these broken swing lows as false breaks because I truly thought it was bullish. So in my mind, I'm already predetermined and said that if price breaks any swing low, it's most likely going to be a false break or a run on sell stops. Many times I was expecting the higher swing low to form. So when price breaks a swing high, there should be a higher swing low that's going to form. But instead, you can see multiple times a swing low is broken. You can see one right here. It's rated. That's a swing low. Now, that in itself could be the start of a new trend of it going down now because it's breaking a swing low and we get a lower swing high. The market makers can now push price lower. But I was looking at the breaks on these swing lows as false breaks. So many times price sweeps swing lows. And if you're, like I said, if you're in the channel, in the chat, you'll see I was sending false break with a question mark. And I see price continue to come back up to run swing highs. It keeps coming back to run these swing highs. So I knew odds are price action was just playing around, getting people psyched out of their long positions. They went long, and they keep seeing this breakdown to the point where it's like, oh, retail logic comes into play. They're like, support and resistance. This is another resistance zone. It keeps coming back down there, making another low. Eventually, it doesn't make a lower low. It continues going higher. We'll speed this up a bit. At this point, I showed some type of actual trade entry theory because we see the speed. There's the speed. Price is running up with a fair value gap above a swing high here, a swing high here. So I was expecting more confluence of, okay, price is going to be well balanced here to go higher. And it is basically rebalancing itself over and over again here. Price is being delivered to the buy side here many times. Even comes back down again. It runs a low, right? It runs this low, but it doesn't continue. After running this low, does it give you a lower swing high formation? No, it keeps running swing highs. That's a swing high here. And this is a swing high here. Play it forward. Price keeps running back to the swing high. So I was more confident in holding my longs. I was like, these are just all fake moves on the market. And I'm still expecting price to give me the 20 pips. And eventually it gets up there. See how price hits 8 a.m. opening price? That sensitive price point here. Look how it wicks back down. It's going back into a premium. That's what's happening. This is a sensitive price point to the algorithm. The opening price for the session. It's fair value. You can see how we thread the needle going back and forth, and finally we get up there and we get to our 20 pip target. And after that we get a breakdown. And what did price come back to? That 15-minute swing high here, the first one. And that was a calm 20 pips, no bias, no COT data, no indicators. That's the favorite part. No indicators on my chart, just candles. And we can see how price breaks down now at this point. I'll speed it up just to show the rest of the Asian session. So you can see how they sold where? In a premium. And they brought where? In a discount. So for the whole Asian session, I'm not going to get into talking about the London session. The Asian session, you can see where did they sell and where did they buy. It's pretty obvious, guys. When you look at the market this way, I'm telling you, it's like so apparent. Where are they placing? Where is the PD array physically appearing for this model, for the buy setup? It's appearing in a discount. The fair value gap is below 8 p.m. So I'm just more confidence, more confluences, more ideas to support my buy, to make me feel more confident. I know other people who went long and they kept seeing these runs on these lows and they thought to themselves, ah, man, price is probably going to break lower. And eventually we don't get a lower swing low. This is the lower swing low here. And price then continues rallying. Doesn't take out this low here. Where does it? It's pretty close, honestly. This low is 134.348. 134.371. Is that correct? Yeah. 348. I was looking at the wrong thing. Well, it's actually a double bottom. This is a double bottom. See the price runs up here? And look at this double bottom. Just for bonus. I know if I play it out, I know price runs this. See that double bottom? Everyone thinks, ah, support. Support, 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 right? Foolish. Not a problem running through that. Retail. Logic. That double bottom. And look how far it runs below the double bottom before running back up. But all in all, just to bring it whole once again, it's a Wednesday, right? This example is forming on a Wednesday. It's not as big and fancy like the other Thursday or Tuesday setups. But generally, when I use this model, Sunday to Friday, or if you exclude Sunday, Monday to Friday, telling you this setup forms. And I'm mainly using it on the yen cross pairs. Once again, I hope you guys are finding this very insightful and very simple. I want trading to be really simplistic for many people. I want it to be so simple you can teach this to your children. If you're someone out there that watches this, one of my supporters, or you're in the chat in your channel, fellow trader, and you have children and you want them to take up this career one day, potentially if they're into it, don't force them into it. But if they're into it, I guarantee you can explain this to them and they'll get it quick. And they'll understand a simple way to find a setup. This model is just finding a way to find a buy or sell. Once again, Forensic Forex signing out. Peace.